Hi, and welcome back to Small Caps. My name is Jess Bertic, and today it is my absolute pleasure to welcome back Alex Scanlon, who is the CEO of Barton Gold. The ticker code is BGD on the ASX. Hi, Alex. Welcome back to the show.
Hi, Jess. Thank you for having me.
So now, Alex, firstly, congratulations on the increase of your Tunkillia project's MRE to 1.5 million ounces, which you announced last week. Can you elaborate for our small caps audience on the drilling campaign that led to the discovery of the new Area 51 deposit?
Yeah, so it was really a progressive process that we started going back 3 years ago, actually. So when we bought the project, we bought it as a 650,000 ounce asset. As a 550,000 ounce asset. This was the beginning of 2020, just the end of 2019, early 2020. We started by doing quite a bit of data review on historical data, looking at drilling, but also looking at a lot of new geophysical analyses. And then we sort of set out a plan for 3 years to extend and smooth the base of the then existing mineralization to create a bulk open pitable body of mineralization, and then to also identify and test a number of large geophysical anomalies. And those anomalies have since turned into the southern and northern extensions of the sort of cornerstone 223 deposit, 223 North, Area 51, which was just converted into the resource, and then Area 191, where we just put out some high-grade intercepts. So it's really been a process of identify, test, sort of trace out, infill, and convert. And Area 51 is the fourth of those new gold zones that we have converted into new JORC resources in the past 12 months.
Fantastic, Alex. So now, where is Area 51 located, and how is that potentially, advantageous in the context of the Tunkillia project as a whole?
So the Tunkillia project sits on a large shear zone. It's called the Jarl shear zone, and it sort of sits as a giant sort of suture point between two very different major geologies. The western side of the shear hosts the cornerstone of the main 223 deposit area. That's what we upgraded to 1.38 million ounces in December 2023. And Area 51 sort of is a long strike of that on the western side of the shear zone. So it's about 3 kilometers away. And what that means is it won't be part of the same large continuous pit, but it is bulk open pitable mineralization. And it's only 3 kilometers away. So it's very useful material for blending feed, or to, act as, year 8, 9, 10 in the future. We'll have to look at all the different scheduling options when we think about how do we optimize the development. But it's essentially part of the project and gives more of that critical mass as we think about where is Tunkillia today, where do we think it can go in the future in terms of scale, but also how do we start moving it forward into studies for development.
Yeah, fantastic. Now, talking about scale, Alex, with the updated resource estimate now that you have, what are the next steps for developing the Tunkillia project, economically?
Well, the first thing is to do a preliminary economic analysis, and that's referred to as scoping studies in the Australian context, in the Australian market. So we are going to move Tunkillia into scoping studies. It has sort of reached that sort of baseline critical mass. And what we want to do now is to establish essentially the baseline economics. So we want to look at this and say, we have other examples in the Australian market of large bulk open pitable gold operations. And this is a very common style of development in North and Central America, for example. We have a few sort of market heroes that we look to in Australia. Capricorn Metals is a company we talk about a lot. They've really demonstrated sort of the volumetric capital and operating efficiencies of bulk open pit mining. So we're going to go establish that baseline analysis on much the same development strategy and schedule, and then start to look at how do we optimize that. And that's when we then move into preliminary feasibility studies and continue to essentially sharpen up the pricing and the development modeling and the scheduling, along with looking at different optimizations or enhancements that we can bring into the economics.
Yeah, fantastic, Alex. Now, you previously mentioned, high-grade targets at Area 191 and Tunkillia. How will exploring those areas specifically, potentially improve the project's economics?
So when we think about those baseline studies that we've been talking about, the idea there is to focus on sort of squeezing efficiency out of the scale and dimensions of the project. So with Area 191, and probably to articulate, we have our deposit, the 1.5 million ounces between the 223 area and the Area 51. They're on the western side of that shear zone. Area 51 is on the other side of the shear zone, a couple of kilometers away from that sort of 223 zone. So it's all in one tight little project footprint. We drilled about a month ago now, we drilled through a structure sort of targeting where we thought a structure was that may be controlling high-grade mineralization. And in the hanging wall of that, we drilled 3.8 meters at 68 grams per ton. And that sort of gave us an initial understanding of what might be some of the defining or controlling features of a series of high-grade intervals that we were aware of, but we couldn't really put into structural context. So we have some work to do there. However, if we can continue to drill that successfully and build a high-grade resource there, even if it's small, that could act as a much higher grade blending feed that can then average up the feed grade of the Tunkillia project in operation, and therefore bring forward or enhance economics either by increasing the number of ounces or increasing the average feed grade such that the number of ounces per ton going through a fixed mill capacity are improved and therefore more profitable. Tarcoola is the same story. So Tarcoola is the neighboring project. It's really one combined project area. It's 70 kilometers to the north. And the Tarcoola goldfield was actually the site of South Australia's gold rush in the late 1800s at the same time as West Australia had its gold rush. On our mining lease there's about 600 historical high-grade workings where people were mining at 30, 40, and 50 grams per ton. And we've just identified for the first time in its 130-year history, the subsurface architecture. So we can now see in 3D all of the subsurface structures. And we can now put all of the major known historical gold occurrences into a consistent structural context. So as we go and start to test those over the coming months and years, if we build up high-grade ounces there, again, that is blending feed that we can use at Tunkillia for a long-term operation to increase overall economics. But it's also material that we can bring forward into a stage one operation. So thinking of Tunkillia as a large-scale long-term base, we also have our central Gawler mill. That mill has processed material from Tarcoola during 2017 and 2018. So there's an option to actually start our march from developer to operator, leveraging an existing mining lease, a fully permitted mill, where you have a combination of proven logistics and proven metallurgy and proven infrastructure, and become a producer for something, some cost that's millions of dollars instead of hundreds of millions of dollars. And that's one of the advantages we really like there, and another reason for us to really focus on this high-grade material now.
Yeah, fantastic, Alex. There'd obviously be a huge amount of advantages with, all of these different areas being so close together and along strike for potential processing in the future as well. As you mentioned, the advantages of the logistics. Now, the mineral resource estimate currently focuses on a specific depth. Is there potential for further resource growth at Area 51?
Yeah, so we actually, as a broader concept at Tunkillia, we have restricted our resource modeling to 300 meters depth, just generally. In the 223 deposit, the mineralization keeps going past 400 meters depth, but our preference is to identify more mineralization along strike and look for shallower mineralization. So in that main deposit, that 1.38 million ounce deposit, about 80% of the material is within 200 meters of surface. So it's kind of got a bias to shallow. In the future, when you already have a pit open, if the gold price went to, name your price, then it's attractive to keep going deeper, particularly if the pit's already open. But with Area 51, we've actually only modeled the resource to about 150 meters depth. So we've been more conservative there with the sort of perspective that, well, this is not an extension of what we think will be an existing 300 meter deep pit. So we're actually dialing that back, and we've also put a slightly higher cutoff grade on that material. And when you look at that material, so we've got a 0.5 gram cutoff grade on that material, but the JORC modeling actually supports a 0.4 gram per ton gold cutoff grade. So what it means is we focus on a slightly higher grade sort of central area that's more continuous and lower risk. But once you open that pit, there is a very large halo of mineralization around it at a 0.4 gram cutoff. And then that material becomes very attractive once the pit's already open. So there is room for growth on both of these things. I think our preference is to sort of dial it back a little bit and focus on really high quality, low risk production. And then, as we said, continue to sort of optimize and extend from there.
Yeah, brilliant. So, Alex, beyond Area 51, and we've spoken about Area 191 and Tunkillia, are there other prospective zones within the Tunkillia project that the company could potentially be exploring in the near future?
Short answer, yes. It's I won't give you the full long answer, but there are many targets that we have there. So the area that we're talking about now, when we think of the Tunkillia project, really sits within a very small portion of that shear zone. So we have about 30 kilometers of that shear zone on our tenements there, and everything that we've sort of looked at sit within about 5 kilometers there. So there are a lot of targets that we have on the next sort of 25 kilometers of the shear. We have a lot of the same sort of dilation, sort of opening up and sort of opening and closing of the shear zone, or deflection points and structures cross-cutting that shear that look a lot like the areas that have been very heavily mineralized or very heavily altered at a minimum in our immediate current project area. So we've got we're quite excited to start working down that shear and testing some of these targets, particularly where they overlap with geophysical targets being produced by the same model that we built internally, and which has yielded all these other new gold zones successfully. So there's a lot to look at there, and we really do think that Tunkillia has the potential to become really a district scale bulk open pit shear zone, basically.
Wonderful, Alex. Now, you've already spoken about so many positive things about what the company is doing at the moment, including your increase in your MRE. But just a final question to leave our small caps audience, as usual, can you provide 2 or 3 key investment highlights as to why they should potentially invest in Barton?
Yeah, look, I think we have a pretty unique platform that is not only the case now in terms of having a real critical mass in terms of mineral resources, but we also have our existing mill infrastructure, which gives us the ability to leverage not only our earlier high-grade resources, but those of people around us or in the market who might want to partner with us on that. So that platform is pretty unique. We have a team that is very experienced in actually progressing and delivering these things. And a lot of what we do seems very kind of boring and regular and matter of fact and business as usual. But the simple fact is that we've got a team that has over 200 years of experience exploring for permitting, financing, building, and operating these things. And when you take that together with kind of the third factor, our performance, what you see is a sort of pattern of conduct or a pattern of performance that really distinguishes us against the market during the past 3 years, which have been very, very quiet for most people in the gold space. We have just continuously done work, continuously reported progress, continuously reported growth. Then we are now moving into sort of that development mentality. So that performance is pretty unique. And we've seen the other unique aspect of that is we have seen a lot of the markets and our share register consolidating around this team, very strong board and management alignment with shareholders in terms of ownership, and then a lot of institutional shareholders buying and building into our register. So it's put us in a very good track on market as well relative to much of the market, even versus gold and gold producers.
Yeah, fantastic, Alex. And, you mentioned previously, the company has been employing all of the modern exploration, technologies out there to actually map and model out potential resource, and you keep adding to that. So it's fantastic and, yeah, amazing to watch. So thank you so much, Alex. It's always great to catch up with you and have a chat and learn about what the company is up to. And yeah, until next time.
Thank you for having me.